Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 15th of July. So I've seen some pretty good moves this week on some of the key pairs and some of the indices, but we've done a lot of moving and really ended up at pretty much the same place on a lot of the indices especially. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Now, as you know, we've had a lot of news this week. We've had CPI and we've got core data coming out where, the market is really anticipating what could potentially happen before the earnings season starts in the US. So it doesn't surprise me that we're at the levels that we're at, but I guess it can provide some opportunities for scalping more than anything else because really long-term positions are going to be very difficult to get into from these levels. But look, we'll start out here with the Aussie USD. And as you can see, we've got a very big indecision candle right at the pretty much the 67.50 area. You can see that we've gone all the way down to basically 66.80, which is it was a pretty decent stab at moving lower, and we went as high as almost 68 or 67.80 as well. Look, it's ended up pretty much somewhere in the middle, and no real surprises there. We've been on a pretty low sort of move. The dollar index is really, really strong, so dollar strength is running rampant at the moment. So if anything, this is probably the stronger of a lot of them. Like, we'll have a look at the euro in a minute, but you can see here that we've got the place where we've basically returned to a level where it's really, really undecided. I don't think it wants to go lower, and I think it's doing its absolute best to rally from this point because 67.50 is a very, very strong rally point for the Aussie USD, and probably from a comfort standpoint, I think anywhere between here and the 69.50 to 70 cent mark is probably a comfort zone for it that I think it really wants to return to. So I could see it probably really rallying and actually holding this base, even if it attempts to go lower. I could see it really rallying from this point, and even at the very, very least getting back up to the 20 moving average on the daily here. This is what I would be anticipating. These are all rejection candles. The last two, this one's only just open, but the last two have been rejection candles from the low, but they've also rejected the high. So that tells us that there's uncertainty in the market, but we do know we're at a low base. So when we know that we're at a support level and there's uncertainty, it's more than likely going to return to the next mean, and that's going to be the 20 moving average. Okay, so for me, scalping opportunities up to the 20 moving average, which is around that sort of 68, or it'd be 68.40 or 30 by the time it gets there. It's only a scalping opportunity. Like I said, it's only 40 or 50 pips by the time you get in, but it could present a reasonable opportunity. You can see the 4 hour, the support level has bounced from there. The 1 hour is really the one you're going to be looking for and targeting. You want to see a series of higher highs and higher lows off this base. It's getting pretty close to that now. We need to really be breaking it. For me to be comfortable in this trade, I'd want to close above the 68 now. If it gets a close above the 68 and we've got a series of higher highs and higher lows, that would take us pretty much up to the 50 points that we're after, which is a 68.50. And I'd be pretty comfortable with that. Until we start to see some big trends starting to kick in, we're only going to scalp, and that scalp is a pretty easy one. Really, if it breaks down past the 67.20 and we get a close, it needs to close lower for me though. Like a daily close below 66.80 would convince me that it's going to go lower and continue on down. So unless we get a daily close below the 66.80, I'm going to be looking for long opportunities. And those long opportunities will start at 68 if we get even a 1 hour close will do it, because then we've got a sequence of higher highs and higher lows. We are only scalping. So US dollar CAD had a very, very serious crack at pushing to a very, very extreme high. Obviously rejected a little bit, but look, it still found itself closing at above these levels here. I mean, we know this level here was very important. We know these levels are important above the 130.50 area. It definitely did close above there. I wish it didn't reject as far. I know that was news driven and I know it's come back. I would probably want to really wait now and look, this is the new target. It's obviously hit it. We've got a 132.20 hit. We're sitting at 131.18, so it's basically 100 points off it. Realistically, you go to the smaller time frames now, it has closed above this level. There's no question about that. I mean, we obviously can see the new candle, but I just don't like that it rejected so hard and so fast. I wish it didn't do that. But in saying that though, we've got a new established level, and that established level is around the 130, or we'll probably call it 131 if you really want to go. We'll go 130.80. That's pretty much the touches of it right there. Go to the smaller time frames and wait for it to pull back to this level. Now that it's here, a change of trend. So you can see obviously we're coming down now, but a change of trend to the upside. So any move up going on the 1 hour or the 4 hour, a series of higher highs and higher lows, a touch of the 20, anything to give us the confirmation that it's going long again. And our very first target is going to be the previous high there. Okay, so Look, it's probably going to be a scalp of about 40 to 80 pips, really, depending on where you get in and how tight the higher high, higher low sequence is, but still a reasonable trade and a pretty good one. This is what we want. I mean, look, at the end of the day, we want a break of these levels, but the break is generally, the best trade is generally the one that comes back and retests, because that makes it the role reversal zone, and that's what really gives it the power. We've still got an amazing US dollar strength going on at the moment, so until that changes around, there's no reason to think that this is going to weaken off, but it did need to break this level, and it has done that now. So really what we want, we don't want to just jump on, because obviously it's seen a very big rejection. There's no reason to be jumping in now, but any long opportunity from this area in here on a 1 hour or 4 hour, any change of trend, and we are off, okay? If we get a close below this level here and we see a sequence of lower highs and lower lows, I wouldn't take a 1 hour on that. I'd only be taking a 4 hour. If we get a 4 hour change of trend and it starts to trend lower highs and lower lows below the 130.80, then we start looking at the next zone, which is around that 129.50 and onto the 128.50. But that is quite a bit away, so you're not going to see that happen anytime soon. As you can see, we'd need a few days worth of action to even get a lower high, lower low sequence on that. So that's the two ways I would play it, but the long is the preference, because obviously the momentum is in that favor and we've broken through a very, very key zone. All right, on to the US dollar yen. Well, this is really the darling that can do no wrong. Like, I mean, it's basically just been, playing the game all the way down from the whole level, really. Like, realistically, hardly done a foot wrong on a technical standpoint. You can see it's come down here, touch the 20 moving average again. Since last week, we've had a very, very strong move up. And, realistically, the one thing I like about this one is it hasn't actually pulled back. It actually did close close to its high, which is always a very, bullish sign. Difficult to get involved now unless you already are in. I mean, really, the trade here was when this one broke here. You know that we always talk about this. This was the previous high here. We were talking about this last week. If that level was to break, which it did on this candle, that's your signal to go long. Pretty easy trading when you're doing it like that, especially when it comes off a 20 moving average like it did on the daily. So on the short side, though, what you need to be doing and looking for is a series of lower highs and lower lows from this level. I wouldn't be doing anything probably short of 15 minutes to probably 1 hour is as low as I would go on those ones. You're really aiming for a pullback to around that sort of 137-ish area. That's the level that the previous peaks stopped at. That's what I'd be looking at as a pullback and maybe joining on the trend from there and looking to go to these highs again. It is a scalping mode, though, on this one, though, for me still, because if you're not already involved in a very big long, then really we don't, it's probably approaching an area where it's, wanting to pull back a little bit similar to this, like, a reasonable pullback. Hasn't done that. It did pause here, though. So, I mean, look, there's nothing probably stopping it going to 140 and it can get there fairly quickly, but really we're not going to guess on that. I would rather trade the pullbacks and actually keep trading the smaller moves inside this big trend, because sometimes that's the best way to actually get the most amount of pips out of it. Short of that, if it fails and breaks down past the 137.30 to 50 area, the 136.50, which is this level here, that's the level that we'd be aiming for. So really, a break of this level here, we'd be aiming for the smaller levels of around the 136.30 to 50 area, which is the previous highs, and failing that, of course, the 134.50, which seems like a very long way away now, but it's got to break a 20 moving average for that as well. So yeah, that doesn't seem likely with the candles that we're seeing at the moment. But if we see that price action, we trade it. It's as simple as that. But the preferred trade is definitely pullbacks and then continue on with the previous highs. Aim for those and let the hard work get done by somebody else. That's the way I like to trade. Let the easy pips flow in by actually going to the targets that have already been set. All right, we'll move over to we'll go to the dollar index first. You can see big move up again. This thing is just the unstoppable machine at the moment. Obviously the preempting all the things that we've talked about so far as the dollar index strength. Look, it reached the all but 109, or I think it did actually touch it just for a second. It's pulled back now a little bit, but again, we do expect that. Like, after you're seeing big moves like this, you're going to see that bit of a rejection. It's going to be almost difficult to predict where it's going to stop now, because it's going past levels where you just wouldn't have anticipated it would do without a pullback. So trading against it would be foolhardy, and trying to anticipate when it is going to reverse is the same. So you just got to go to the smaller time frames and trade them back to these levels if you can, like you go to the 4 hour or 1 hour. Of course, the euro is the beneficiary of this sort of trade anyway. But you go to these, you see a series of lower highs and lower lows, and you just aim for the previous what was resistance, which will now become support. So, basically, you're trading the euro anyway. So we'll move over to the euro.
As you can see, we hit parity and broke past it. Actually, we went down below it around that 109.50, very 99.50. Sorry, when it's gone to a level like this, it's very, very difficult to say where it's going to stop, and you've got to treat this level with a lot of caution, because a lot of people have actually, you're going to see a lot of very, very big orders at this level where people anticipate that it must reverse at this level. It doesn't have to do anything. So really what we need to be doing is waiting for a sign, and that sign has to come in the form of a daily change of trend. If we don't see a daily change of trend, I'm going to find this very, very difficult to trade now, because realistically, the anticipated move should be back up to the 20 moving average, which is around that sort of, it'll be, by the time it gets there and we get a lightning bolt, it's going to be around that 102, 103 level. So, really, that's what you would expect it to happen, and that's what I would want to see happen. I don't really want to get involved in a trade like this until it does that, because really what we're just doing is guessing, because, parity level could break easily, and it already, I know it's reversed back, but it did get past it. And if it does push down past this low, where it stops is anyone's guess. And realistically, it's very, very difficult. I don't like sort of trading into the unknown. I would rather have a little bit more certainty in what I'm trying to identify. So to me, if we get a change of trend to the upside on a daily chart, I will start trading along to the 20 moving average. That would be about it, though. There's no real reason why this would have to reverse and go up any higher, but that would be the initial trade, because you've got about 200 pips there. That makes it for relatively easy trading. Again, going into an area that it will be comfortable. But if you're going to scalp it on this one, I would be going to the very small time frames and just trading bounds of 50, really. So bind up all of the 50 markers, and you can just trade inside those bounds. It could remain here for a very, very long time. I mean, it potentially could consolidate here and trade within 100, 150 pip band for a long time, and that would provide some really good scalping opportunities. So that's how I would trade that one. I wouldn't be looking for the big long reversal out of here until we see at least a lightning bolt on the daily. If we don't get that, I'd be staying in scalping mode on this one. It's certainly been an interesting move. I did a show, or probably about 4 months ago now, where the host actually said, is there a chance that the euro would go to parity? This was when it was about 114. I thought, wow, I mean, that's a big, big call, but I guess anything is possible. But I certainly wouldn't have anticipated it was going to do that at 114. Yet here we are. So, I mean, you can see the fall from grace has been quite extraordinary. But now we just have to trade it as it is. And the thing is, saying that it could go lower, it absolutely can. Anything is possible now, but you've got to let price action dictate. My advice here is not to just guess and hope. You really want to let price action dictate. We've got a daily close below the 99.50 area, and then we can start targeting some lower levels, but without a lot of confidence. But if we get a lightning bolt up on the way up, we can start targeting the 20 moving average, which is my comfort zone in areas that the market has been most recently. All right, we'll move over to the last one, the S&P. So, look, we saw a big rejection candle on basically the last day of trading here. You can see here we've pushed down all the way down to 37.40, and we've seen a very, very big pull up. So, it's a 50 points, more than 1%. It's been a big, big rejection off that low, but I still think this is finding itself in an area where it really wants to wait for the news to come out proper, and also earnings seasons to start. I don't think we're going to see anything really extraordinary on the S&P until earnings starts and we start to see some of the moves on the big company reporting in the first week. Once we get that and we get a bit of guidance as to how everything really is tracking, I think we're going to see a far better move and a far clearer move on this particular one, in the S&P 500 in particular. So it doesn't surprise me that it's here. It wouldn't have surprised me if it stopped at the 37.50 either, because we know that that's a pretty strong support zone anyway. The fact that it's rejected off it, I'm not going to read a lot into that. It's rejected off that a few times now and still failed to make a new high. I could see it probably being trapped between the 20 moving average and this level in the shorter term. And then next week, we start to see a bit of a breakout. For me, it's very easy trading, and it's scalping in between these two boundaries, the 37.50 and also the 39.50 is scalping mode. While it's trading inside those two zones, we just scalp. And until it breaks, and when it does eventually break those zones for daily candle, if we get a daily close below 37.40 or above 39.50, then we start to look at the longer trends and move to the next levels. But while it's inside this little band here, we're going to be trading basically just scalping zones in between those two. It's a big range too. I mean, you can certainly get decent moves in there. Pretty good scalping though in those areas, and then really you'll be able to take advantage of a bigger move when we eventually get a break above here or below this level here at the 37.40. So good trading if you're scalping, but you've got to be doing it obviously in a time when the US is open, because that's when you're going to get the best moves. But the daily breaks, I think, are going to come, and they're going to come very soon. But we're really just waiting for earnings seasons to start. And once that does, I think we're going to start to see a breakout. One way or the other, we're going to see some movement, and then we'll be able to get involved in the bigger trend. So, hope everyone's had a great week's trading. I think we've had good opportunities again. The key levels that we talk about all the time are holding up, but I think we've had enough volatility this week where you should have been able to get into some pretty reasonable trades and out of them probably a couple of times over, actually, because really the market's done not a hell of a lot, even though it's been volatile. A lot of the big ones have actually ended up where they were last week. So let's see how we play out with the remainder of the data for this week. And next week, we'll hopefully start to get some movement, and we'll be able to get involved in some trends and some breaks of these levels that we talked about today. Have a great weekend, everybody, and I'll see you next week.